Hi folks, Pete at E-Mini Volume here. Today was a nutty day, and so I thought I would make a little video because sometimes what didn't happen is more important than what did actually happen. And today was a perfect case. So off the open, we came into today with a neutral bias with a very light lean to the downside. Now we according to the trade plan, the scenario one range low was our micro bias level. So what did we do? We opened up on pretty good volume, which and we also got a sell signal pretty much right off the open. But more importantly, I think this is what might have confused a lot of people, is we opened up with approximately a 14-point gap down. And what was it, 13.5? So we expected tick to open down, and it did. However, it opened a lot deeper than we've seen it in a long time. It opened around the negative 13.5 level, and I saw a lot of posts about that this morning. And so that was the catalyst for making this video initially. So I wanted to go over how I was looking at it. So on that type of a gap down, we would expect tick to open down. That's expected. That's not new information. But we wouldn't expect it to open 1350 down, negative 1350 down. We could expect it to open around negative 800, maybe negative 850. So it opened a lot deeper than we expected. And we were opening gap down off an ETH session that had its VPOC below range. Just prior to the RTH open, the NQ gapped her ETH VPOC down into her lower distribution. And so we had we had several indications that we were going to open with bearish price action. So now, as we opened, tick started to climb up. And I saw some posts about this. Well, this isn't something that concerns me. Let's keep in mind, on a gap, the larger the gap, then the more confusion there can be on the open. That is to say that not all stocks open right at the open. You have market makers and specialists matching orders, etc., trying to clean the book. And so the tick, I don't even have my tick open exactly on the RTH open. I have it set to a custom session to delay it. So I don't have any of my internals open until a minute into the actual RTH trading. I want to eliminate the noise. So if your tick opened deeper than where mine did at negative 1344, that would be why. So now tick after, when it opens this deep and our gap is only 13.5, 14 points, we expect what? We expect a correction in tick. So as price is coming down and tick is correcting, we ignore the tick. That's nothing to look at. So I saw a lot of people posting that they felt that this down here was the level to watch for any indication on the type of a day. Well, I'm going to disagree with that. And I'm going to say the real level to watch was after tick corrected. Tick did its correction. Price made its initial move down into the S2 primary target. And we know that to break an S2 primary target, or a primary target of any scenario that we've laid out for ourselves, we have to have some pretty good price action. So this was the tick level that I was looking at, and this is what I considered to be important. So what did we do? After we came down, hit the scenario 2 primary target on really not that deep of a tick, negative 700, not even close to what we'd consider trend day. Then we had an impulsive move up. You can see here on the tick, an impulsive move up here on the price. Now, I will admit, this had me thinking, okay, we might be going to break the Ivy high. So now I'm thinking, what do I want to see and where can I protect myself? Well, My ideal scenario would be it flag out while tick correct, and then it pops up and breaks, and we go fill the gap. Or it pulls down slightly into here on a nice low volume, just a little walk down. Well, we didn't have that. So what did we have? We had a tick expansion up. Then we had a pullback all the way down to VWAP. And also, basically at the start of where this volume started, that triggered this move up. So now if we blend these candles together, these are 2-minute bars, which will bring me into another discussion, so I'll just go into it briefly. I do trigger off 2-minute bars, and I watch 2-minute bars. But let's really be honest with ourselves. What does the open and the close of a 2-minute bar mean? I mean, it really means nothing. What is it in the scheme of the entire day? What is it in the scheme of the market? Nothing. What is this, when does that start to get meaningful? Well, I'm sure there's several traders that have different opinions on this, and this is why I have a problem with moving averages and I don't use them. I don't understand the rationale on a moving average. Why would a 10-period moving average on 2-minute candles, why is that meaningful? If the close of a 2-minute candle is meaningless, which it is, then why am I using a indicator that calculates off the close of a meaningless candle? So if you are using moving averages, that's just something to think about. Make sure that your periodization on your moving average is something that makes sense to you, and you feel that the close of the bar that it calculates on is meaningful. I'll go into deeper depth in that at another point in time. So let's just continue with this. So we had a move up. Then we had a move down on not much of a tick. So we had good movement down. We had a correction in tick. Couldn't make it down to here. Couldn't even make it down to here, which was correspondent with this level. Well, honestly, this type of a move shouldn't be retraced. And this type of a move shouldn't have this type of a formation on the top, in my opinion. We had high volume break down this bar. So you can see, just in this price action, you can see there were people, including me, that was thinking this move might be real. And they got long. They got long right here. You can see it. And how do we know that? Well, this bar shows us. This bar right there. I can't draw an arrow very well, but it's that bar. That bar shows us. That bar showed us that they were in trouble. Now, if this bar came down and would have hit here and then caused a move up, I could have been looking for a type of a candle formation to look long with a stop down into here below VWAP. We really didn't want this below VWAP again after this type of a move up. So at this point, tick is diverging, but it is balancing above zero. Price is diverging. So we do have some confluence in price and tick telling us that this is possible balance area. Now the developing VPOC moved up. The VWAP started to flatten out. So now, here's the important part, what started the video. What didn't happen? What didn't happen that gave us clues that this day could just go silly? In my opinion, this. After this move up, we have a V bottom. We have tick all the way up. I should draw it from there. All the way up. And then starting to balance. Now, this area in here, this just should not have happened. Now we can see here, high volume on that bar corresponds with that high volume on that bar. So now in the morning I did tweet that we had an open drive down and 1450 was the level to watch. Well, there's 14. So even if you weren't long off the open, this was a great area to get long. You had a zone to work with, which was the S2 initial target. Then you had your first level, basically your first speed bump, developing VPOC, down into the S2 primary target. Very nice trade. Very, very nice trade, in my opinion. So, then, what do? We come up here. Now, we did breach this area on tick. But, is that impressive? We closed one candle and immediately returned back to it. We only one ticked the IB low. One ticked the IB low. We had high volume. We had high volume with no follow through. We had a low volume pop up and another high volume down that couldn't even close as low as this first bar. This was a warning sign that the extension lower was unlikely. Now we also had another warning sign. And let me get into that. Let me okay, now let's look at the ADD. We've already decided that tick isn't helping us a whole lot, and it's just starting to range. After going up initially and hitting the positive 750, it came down on this low right here and did hit negative 800. Okay, so it did go a little lower, but what didn't happen once again? Look at this. We had a major divergence on the internals, on the ADD. This is a pretty big deal. Now, if this were to continue down, then I'm sure this probably would have chased it down, because that's what tends to happen in a liquidation market. That the internals tend to catch up with price. Fear is significantly more of a motivator to action than greed is. So that's why the internals tend to play catch up in a liquidating market. Well, today, as we saw the warning signs in the price action. We saw the warning signs in tick. We also saw some pretty good warning signs here. So then what did we do? After we've had this impulsive move down, impulsive move up, a little correction with the balance, and a breakdown. Now, normally in this type of price action, we would be expecting extension lower. We would be expecting a pop back up into here, and I'm sure this was another trap. This is the 2708, 2709 area. This was another trap just below VWAP, looking for extension down. Well, we saw several warning signs, tick, ADD, and this is a great example of what not to do, what didn't happen, what should have happened, and what didn't happen. So then, this day was just silly. So then, what did we do? We broke VWAP and developing VPOC through the high volume zone, which is this area for the day. We broke through that on high volume, had another high volume bar, which was a hammer, and then no follow through, a spike up, and then a rip back down, right back through. Now, this is our high volume area. So now we had a low volume move down through the highest volume area of the day. This was pretty much the deciding factor for me, where I just decided I wanted no part of this day. And I think I made a good choice. So, what happened again? We came down, we balanced, we tried to break down yet again. Now look at this bar. Look at this bar right there. Look at the volume associated with that bar. We hadn't had a bar with that high a volume since the close of the IB. That was the highest volume bar, narrow range, tried to break out, couldn't do it. Low volume, walked back up, and I'm sure this was another trap. I'm sure this area got some people trapped, even if they didn't take it. They watched this bar, they tried to get the extension down, and it just ripped right back up into where? Now, the high volume section of the day is even wider. And the day's nonsensical behavior just continued from there. It just continued from there. We had the breadth ranging, not doing anything, while price was just, this is a type of, small stop buffet. If you're trying to use a small stop in this, you've really got to ask yourself in this type of action, what is my bias and why? Do I have a strong bias? Let's say that you saw this and said, okay, my bias is long. Okay, so your bias is long. All right, let's run with that. Now, what would you want to see? You would want to see at the minimum, at the very minimum, price have the ability to go up and test up here again. If it couldn't test up to this level again, and then look for a pullback into this area, you could use the top of the high volume zone. You could also use, as you can see, this is where a lot of the fighting took place. So you would want to see a pullback into here and then look for extension higher. Well, that didn't happen. So let's say you wanted to short this. Okay, if you wanted to short this, now where's your stop? You're going to short this. Now, unless you have a resting order up here, which in this type of environment is not wise, in my opinion. I wouldn't put a resting order in here. I would be hovering over my dome ready to hit market. So where would your stop be? Well, your stop would have to be at the very minimum up into the singles of today, wouldn't it? Isn't that where the singles are? We've got single prints above here. That's it. That's where the true rejection is for the day. This is where the IB closed, right? So we have single prints. We have B period closing, C period, and above there we have A period singles. That's where the rejection is. So you'd have to have your stop way up here. So for me, anyway, you'd have to have a stop 16.5, 17, right in that area. That would take us neutral for the day because we did one tick the IB low down here. Now we have had several neutral days lately, and that's not something I was willing to bet on either. So this isn't a trade I would have taken regardless with this move up, even with this move up. And failure, now if we would have popped up into here and that pattern on the internals would have stayed, absolutely. I would have shorted up in here. Just use a volatility stop. Target would have been back down into here, right back down into balance. That would have been a trade I'd take. But not this one. So then we came down. We just chopped it up on high volume, came down, made another little silly low. Once again, right here, on ranging internals, ranging price. So when you do have ranging internals and you have ranging tick, which tick was, let's look at tick one more time. Or what was tick doing? Tick was simply ranging. After that initial pop up, did we expand the tick showing aggression? No. Did we expand it down? A few times, but nothing significant. We couldn't even breach the 800 level on a close of a 2-minute tick bar. So this is what didn't happen. What didn't happen is any extension, and what did happen is the tick, the ADD, and price was all balanced, which gave us an indication that we were going to balance throughout the day. Now this day was very unusual, in my opinion, in the fact that we don't generally have this type of action with this type of volume. So let's take a quick look at the profiles. Here I have the profiles of the ES and the YM. Well, I want you to take a look at the profiles individually, and then we'll take a look at the profiles as far as the 4-day structure goes. Now I want you to pay attention to the metrics of each of the day on these profiles and compare it in a relative nature to the profiles of days prior. So let me move these down. So here we had a 22-point day. We won't look at the YM because for the metrics we want to use the ES, not the YM. So we had a 22-point day on less than 1 million contracts. We had a 13.25 point day on less than 900,000 contracts. We had a 17-point day on 790,000 contracts. So each day, we had lower volume and we had contraction. And then yesterday, we had a double distribution neutral day. If you remember, I even tweeted that it would be a perfect storm if on the daily candles we had a spinning top or a doji, and we ended up having spinning tops. We do have a good week setting up, and I am expecting a gap tomorrow. Now, which way is the gap going to be? I don't know. I'll tell you in the morning. So I have no position on, and I don't intend to have a position on until tomorrow. Having said that, I am giving slightly more weight to the sellers. Just slightly. So I hope this video helped, and any questions that you may have, please fire them at me. Hope everyone had a wonderful day, stayed out of trouble, and have a wonderful evening. I'll see you tomorrow.